Hey guys, remember MGIC is here to do your home-ready loans, your high LTV, 97% LTV loans. You need to be on this one. MGIC can help you out with your insurance. Click this banner right over there. Now I know you probably saw this, but it bears a little bit more discussion. So a judge threw out the lawsuit that Quicken filed against HUD and the DOJ. The reason Quicken did this, filed the lawsuit, was because they were facing their own lawsuit from the DOJ over improperly originated and underwritten FHA loans. So, Quicken, they sued back.
You want answers?
I think I'm entitled.
You want answers?
I want the truth!
You can't handle the truth!
Now, a judge dismissed Quicken's lawsuit because if he didn't, the initial case, the DOJ case, would have been heard in DC. If Quicken's case wasn't dismissed, then theirs would be heard first and would be in Michigan, a much more favorable site for Quicken, who's headquartered in Detroit. A broken city, by the way, that's almost single-handedly being restored and rejuvenated by Quicken owner Dan Gilbert. Yeah, but F him, let's sue him, right?
So follow us here. All right, we get this. Posturing for a venue. Going on the offensive. I do get this. But ask yourself, what's at the heart of this whole situation?
It's improperly originated and underwritten FHA loans. According to the DOJ, HUD's paid out more than $500 million on 3,900 mortgages endorsed by Quicken since September of 2007. Now, I don't know if you're aware of this, but we had a housing crisis post-2007, which still has residual fallout today, 8 years later. It stands to reason that loans were going to default that were both properly and improperly underwritten. It's not as if one lender was going to find itself immune from a national global housing crisis. In short, it stands to reason that Quicken, like every other mortgage lender in the country, was going to have defaults, and the defaults are mutually exclusive from endorsement and underwriting, meaning they could have something in common, but they don't have to have anything in common. Yet that's what the findings from the DOJ assume, and it's wrong.
Now, in the case filed by the DOJ, they used damning examples against Quicken to support their claims. How a lady had overdraft on a bank statement and Quicken still funded the loan. Now, if we use this standard to exclude FHA low to moderate income borrowers, then nobody would ever have gotten an FHA loan. And oh, that alone is not a material defect.
And the DOJ points out another example where Quicken asked for $5,000 more on an appraisal, which pre-HVCC is also not a defect, as it's the appraiser's opinion of value, yet these points are used to paint a picture against Quicken.
Now follow us here. If we rightfully conclude that underwriting and defaults are mutually exclusive, and examples given by the DOJ were not material defects and examples of improper origination and underwriting for the time that it happened, then we're back to square one. Was Quicken improperly originating loans? According to Quicken's Bill Emerson from a Housing Wire article, we're talking about 55 loans that the DOJ said had issues of 250,000 FHA loans that were done in that time period. We refute 47 of those, so we're only talking about 8 of those loans.
8 loans? Really? 8 loans? Hell, let's say Bill's wrong and it's actually 47 loans. If the allegations from the DOJ were accurate, the number of defaults would be bigger. The number of improperly written loans that defaulted would have been higher.
So the result of the DOJ's findings, here's the proof, the evidence doesn't support the accusation.
With that said, Emerson goes on to give examples of the DOJ findings. He speaks of allegations of missing documents that actually were in the file. And in another case, a client's monthly income had been miscalculated by just $2.10. And in another, Quicken provided a client $26 too much on a $99,500 loan.
So you make the call. Who's got it right and who's got it wrong? Think of this. By anybody's standards, Quicken writes the most and cleanest book of FHA loans. So if the endorsement company, Quicken, of the cleanest FHA loans face a lawsuit, then who, right now, writing FHA loans is safe? If the bar is set to punish the best, nobody's safe. That's the problem, and that's the reason right now why lenders are running away from FHA loan.
FHA, which is to serve the underserved, to provide financing for low to moderate folks and families, is becoming a pariah in the lending community because the most likely people to default are those who fall into FHA's framework. And if defaults are going to lead to hair-splitting analysis and judgments, then lenders won't do them, as we've seen, and as Quicken, the largest FHA lender by volume, is threatening to do as well. Who loses? Not the CEOs, but the low to moderate income borrowers.
I'll be very curious to see what happens with this now.
I will too, man. It's ridiculous. I hope Quicken just kicks butt and wins this thing. We put this to bed.
And you know, it's not even necessarily that it's Quicken. I think we need to have more pushback and less settlement in the mortgage banking communities right now. I just read an article where banks have paid over $300 billion in legal fees to date. $300 billion, which exceeds any of the bailouts and any of the problems, and that doesn't even consider all the other costs associated with the meltdown. It just needs to stop.
It does. Well, let us know your thoughts down below. I'm sure some people won't agree with us.
That's fine.
They think we side with banks sometimes, but sometimes we just side with justice, man! Okay, leave your comments down below. Forward and share, subscribe in the upper right-hand corner. We'll catch you tomorrow here on the National Real Estate Post.
Bye.
Bye.